Edly is an online marketplace that's connecting investors to schools with ISA programs. Here to explain how it all works and the potential return for investors is Charles Trafton, president and co-founder of Edly. Very good afternoon to you. Thanks for joining us.
Thanks. Good to be back. Thank you.
So just explain how the ISI asset class actually works. The student has their tuition paid for them, and off the back of that, they then promise to pay, a certain percentage for a certain number of years, but with no actual debt attached to them.
Correct. It's not a loan. It's not debt. This is where an investor pays student tuition, typically in lieu of a private student loan, and in exchange gets a certain percent of their income for a certain number of years after they graduate. The major differences between this and a loan is there's a minimum income threshold below which the students are not required to make payments. They go into deferment, typically $30,000, $40,000 annual salary. If you're not making above that, you're not making payments. And the second thing is there's a predetermined cap. So ISAs are progressive in the sense that higher earners will pay more than lower earners, but everybody's subject to the same repayment cap, typically 1.5 or 2.5 times tuition. Unlike a student loan, which can go on for 7, 8, 9, 10 times what you borrowed.
Two quick follow-ups. Even though there's no set debt with no interest paid against it, does the sort of prerogative that they owe money back stay with them until they get that job, until they go above 30, 40,000 or whatever it is, even if that's a decade later?
Yeah, it's very different than a loan in that in an ISA, you need to make a certain number of payments. After that, you're done. And it's typically less than 7 years. And so whether you make you can either stop paying the ISA by hitting the number of payments or that repayment cap. So higher earners might repay the thing within a few years if you're making 100,000 salary, like a lot of the technology schools we deal with. And others will just make the 24 payments and it'll be less. They'll have paid less for the tuition. So for the first time in the US, we're connecting the price of the education to its value.